Hi, everybody. Welcome to TradeGATEHub.com. I'm Dale Pinkert, and we have a great guest today. Daniel Lacalle is with us. Daniel, great to talk to you again. It's been too long.
Thank you so much, Dale. It's a great pleasure.
And you're so highly credentialed. I could use the whole time talking about all your accomplishments here. I have your blog and your website up here, and it's never ending. It's prolific. Plus, you're an author, and you're a fund manager, and your people all over want to have you speak because of your insights and your following. So, of your accomplishments, Daniel, what would you say would be a couple of your most proudest recognitions that the economic world has offered up to you?
Well, I would say that it was a great privilege to be mentioned in Congress about the subject of the Cuban crisis. I think
okay.
That was quite important.
Okay, and that was, you're too young for it to have been the Cuban Missile Crisis. So you're talking about, I was just a kid, so it was the Stone Age, the Cuban Missile Crisis. Which Cuban crisis were you talking about? Maybe after Castro
Yeah, it
passed
was
on?
after, you might remember that there was a period of time when Fidel Castro died,
Yeah.
in which the government in the United States and in other developed economies sort of tried to whitewash the new regime, or talk about the opening of the Raúl Castro, his brother.
Right.
And what I did basically was write a few articles reminding people that nothing had changed, and that there was still a very oppressive regime that was and continues to impoverish the citizens in Cuba. So that was one of the things that I would highlight.
Wasn't there a large migration from Cuba to the U.S.? Was that called the Mariana Boat Lift, or am I guessing correctly?
You're absolutely correct. In the late 70s, early 80s, yes.
Yeah, so it brought a lot of hardworking guys, Cuban people, to Florida, and also gave us a great Hollywood experience with Scarface.
Ah, you bet, absolutely.
Right?
Absolutely.
All right, so let's get serious, because Dan, since you and I last talked, so much has happened, Daniel, and I really want to start, since you are an economist, and I know you're a central bank watcher and a Fed watcher, and what's going on in the country. Really, the elephant in the room would have to be what happened with yields, right?
Yeah.
The magnitude of the move and the velocity of the move in yields. From if I go back a little bit longer term, I've been a bond trader for a long time. I can't remember moves like this from 170 here up towards almost 3% in a month and a half. Can you?
Yeah, well, I don't remember such an abrupt rise in yields. Even, for example, if you remember the Eurozone crisis in 2011, it was quite not in such short period of time. There was obviously a larger move in yields, but it was sort of in a more prolonged period of time. I think that this shows how quick and how drastic was the reaction of the investor base to the expectations of inflation. Is that for a very long period of time, even though inflation was rising, and even though CPI numbers were showing that inflation was creeping up, there was always this sort of excuse. No, remember that first they said, well, it's because of the base effect. Then they said it was temporary. Then they said it was transitory, and finally that it's persistent. And now it seems that it's now that bond traders and that bond investors are starting to realize, and it coincides coincided with the fact that there was a very aggressive figure of negative yield in bonds in the economy. So a lot of pension funds and a lot of bond investors have found themselves tied to a number of assets that were yielding not only negative nominal, but also real rates. No?
So they were in it. Normally, pension funds look for 7% about returns to keep them solvent with the people they're retiring to be able to pay them, and they actually got in negative interest bonds, and so they were trying to trade principal to get that 7% through appreciation because they weren't getting it through yields, and now they must have major losses. Could this lead, and I've read about this for years, that eventually there was going to be some type of pension crisis because they had to chase returns because of what the Fed was doing, financial repression, where people had to go out on the risk curve. Are those clouds on the horizon for a pension crisis? I know there's not enough money in that pension guarantee fund to cover even one pension.
Absolutely, there is. I think it was already showing in 2020 because, as you just mentioned, a lot of pension funds had to chase some kind of return by moving into very aggressive levels of risk or even adding equities. Remember that, for example, the Norwegian pension fund went from, I believe, 10% equities to 40% equities. And obviously, so we've seen, you've perfectly mentioned, first it's financial repression that leads investors to take significantly more risk. Then it's chasing principal. Basically, what you don't get from the yield of the bond, you expect to get from appreciation. But that's a very dangerous process because ultimately, what has happened is that investors were betting on two things that were impossible at the same time. On the one hand, that there would continue to be very aggressive financial repression from central banks, which would keep bond yields low, and at the same time, that there would be no inflation. So it was a very dangerous bet, and it ended up blowing up in the face of numerous, particularly European pension funds.
Okay, I know you're more negative Europe than the U.S. I've read some things that feel the U.S. is probably the cleanest dirty shirt out there in the globe. If there is a pension crisis, people are going to they're going to go to the streets, even if they're on walkers and canes. The retirees, they're going to be out there. It could be a major another rip in the social contract here in the U.S.
You bet that it can happen. And remember that, for example, in Europe, in France, in Germany, in Spain, and other countries, you had already protests in 2018 because of the rising cost of living. You remember the yellow vests and the concerns about the rise in cost of living. And that was before anybody talked about inflation. But at the time, at least, those people perceived that their pensions were secure. That is not the case anymore. So yes, we need to be very, very aware of the risks in terms of social unrest, because not considering that risk can be very dangerous.
Okay, and I want to ask you, because I know you have commodity experience, and I do want to get to the crude oil, but I want to talk about agricultural inflation, because the Fed can't print soybeans. Right?
You bet.
And the Fed can't print corn or sugar or wheat or anything that grows. And the war has only exacerbated it with Ukraine and Russia being 30% of global wheat production. I know last time there was a problem with wheat, that was the Arab Spring. Popped up because of high food prices. This seems like it's going to even be more dramatic. And do you think it's going to be limited to the Middle East, or is this going to affect everyone everywhere?
Watch out for Latin America. In Latin America, the food crisis is very severe and has led to a number of countries deciding to elect populist and extreme left governments, which in turn have made things a lot worse. So I would say Latin America is a place to watch because, as you mentioned, the United Nations food price index is at all-time highs. And unlike in other periods, what used to happen in Latin America, for example, or other exporting economies was that, yes, food prices may go up, or there was some kind of concern about the rising cost of living. But on the other hand, at least their currency strengthened because of the higher level of exports.
Yeah,
Well,
and they're
what
a
is not
producer,
happening?
Brazil, a major producer of beans and grains, and
Yeah,
Argentine wheat.
exactly.
And are they going to be able to bring in crops, or are they having problems with their planting seasons and growing seasons now too?
It's yeah, exactly. That is one of the problems, is that those countries that could benefit from offsetting the impact of the Ukraine crisis have their own problems because of the planting season, because of the ability also to export properly. Because, for example, in Argentina, an exporter is not particularly incentivized to conduct that activity when the government expropriates the dollars that they receive and force them to exchange it at a rate that is completely outside of the reality of the exchange rate of the peso. No, so it's
Okay,
basically a double taxation. No, so that is
okay,
a big problem.
yeah, it is. And so those are currency controls, which brings me back to a lot of people are saying, well, Russia's winning the financial war
Mm.
because the ruble has recovered all of its losses, and then some today. So you explained it that it's because of capital controls,
Yeah.
and that there's a black market in rubles where they're selling rubles at quite a discount, right?
Absolutely. The exchange rate that we see in our screens of the ruble relative to the
Yeah.
dollar and euro is completely fake, because when it collapsed, the government implemented the most radical capital controls that exist currently anywhere. And no Russian business or citizen can exchange rubles for US dollars or euros. And what we see on the Telegram chats and on the social media chats in Russia is that people that actually want to get euros or dollars for whatever reason and exchange them for rubles, the reality is that the exchange rate that is accepted in that underground market is between 70 to 90% lower for the ruble than what we see in our screens today.
Okay. And since we're there, do you have any kind of view how this tragedy is going to play out in Russia and Ukraine?
I think that the situation is stagnant, and it's going to unfortunately stay like that for quite a long period of time. Because when you speak with people in the Ukrainian camp, they feel that they are winning. When you speak with people in the Russian camp, they say that they're winning as well. So unfortunately, it looks like it could drag on for a very long period of time. I don't think that the Russian government can decide to pull out from Ukraine, because it would be a massive blow to its credibility inside Russia. And I don't think that, and obviously the Ukrainian government cannot stop fighting for its remain independent, because they know that after Ukraine there would be other countries that would
Yeah.
suffer a similar invasion.
Any way we could put a fund together and get the best hitman in the world to take care of the problem?
I don't know.
you know, anyway, moving away from that, let's go to another troubled spot and let's talk about China.
Hmm.
And, mainly publicized are the extreme lockdowns in Shanghai and everywhere else. And that's a reason for slower growth in China. But from your writings, you're saying it's not just COVID. So
Yeah.
we don't even hear about Evergrande anymore, Daniel.
Exactly, and that's what's alarming about it all. First, if you look, for example, at real estate sales, housing sales, they were already down 23% in February before any lockdown. No? So what the government is basically doing in China is to put everything under the COVID zero policy umbrella, when in reality, the problem of the economy is that the real estate bubble was already bursting in a domino effect. And at the same time, the government is implementing a very aggressive interventionist agenda on the technology and retail sector.
Oh,
So
yeah,
those two things.
those stocks were decimated.
Yeah, exactly. And so basically what the government is doing is to try to get people's attention to the COVID thing, when what's really going on is the real estate bubble burst and the intervention on the technology and retail sector as well.
Okay, and there's an election coming up in China. It makes me wonder when I think about famine or food shortages. When I was a kid growing up here in America, my mom would say to me, Dale, finish your dinner. There are people starving in China.
Yeah.
So, it still goes in my, I better get fatter now because, I don't want to waste the food. But I talked to some ag people over the last few years. China was a huge importer of wheat. It's almost like they read the story of Joseph, and they were putting away a lot of grain, storing a lot of grain for a potential rainy day. And then I heard they had this clean plate policy in China, where I don't know if it was clean plate, but it was smaller portions they were getting the country to get used to. Um, they saw this coming. If I think of any country that could have unrest because of a food problem, it would be China.
Certainly, certainly. And I think that that's why the government is using the COVID excuse to implement the most aggressive measures of repression on the population it can, because it's basically given a warning uh, day after day after day on the national media to each and every citizen: be very aware that this can happen to you. So I think that, yes, it is an important risk, because when you look at inflation rates globally, the inflation rate in China makes no sense. You've just mentioned a number
All
of
their stats are opaque, aren't they? Who
yeah.
can believe them?
No, nobody can believe definitely the GDP, but the inflation rate is even more surprising right now. They say they have a 1.5% inflation rate, yet you see that anybody that travels to China, that food prices, that shelter, that clothing, all of those factors are rising much faster than official CPI.
Okay, so that kind of brings me to uh, the fact that they're using COVID as an excuse now. And if things become more serious, they're watching what's happening in Russia and Ukraine, to, stoking nationalism is in the dictator's playbook.
Yeah.
And a lot of people are worried about that there might be a move on Taiwan by China. Do you see it being something that uh, could be fairly imminent?
Very big
Uh,
risk.
huh?
Yeah, I think that it's a
Imminent?
very big risk. Yeah,
Okay.
I
All
think that.
right. Well, because they're watching. I mean, they're not worried about sanctions, are they?
No, they're not. That's the thing, that you're absolutely correct on that one. They're not worried about sanctions. They're watching what the world is doing with Russia and Ukraine.
Yeah.
Sort of, and you can almost imagine that Xi Jinping and Putin had a conversation, and Xi Jinping probably said, "You go ahead and let's see how everybody reacts, because we're going after to move on Taiwan." So I think that there is a very significant risk of that happening. And I don't think that the world knows how to deal with that properly.
Yeah. I mean, it's a little different because we do have treaties with Taiwan, and
Mhm.
Japan will probably be involved too. So I have to get to something that I know you're pretty experienced with, and I think we're getting, now that everyone has become super bullish commodities, I think we're getting a breather in
Hmm.
commodities. Gold it's coming back today, but pretty negative week. It's kind of a topping formation here,
Yeah.
and perhaps yields are peaking, and they might get a break. And I wanted to bring up, I know you have experience in energy, and same type of formation where we peaked up here, Daniel, and the support down here. What could you think of fundamentally? Could it just be demand destruction
Hmm.
that could take crude under major support and break it to 80 and maybe $60 going into the November elections? That
Yeah.
might, with Biden in the toilet, might
Hmm.
help him a little, even though gas prices probably won't come down even if crude breaks. Is there anything on the world stage or domestically in the US that could generate that type of decline that you can think of?
That type of decline would require an undeniable solution of the Ukraine invasion, and at the same time, very significant reduction of demand. I think that what we're seeing right now, that correction that we have seen recently, comes from the already evident reduction in demand growth that is coming fundamentally from China, but also
Yep.
from other developed economies. So I think that that is logical, seeing that sort of demand destruction that we're starting to see. However, that support level, the first one that you show, indicates that the geopolitical risk is going to remain elevated anyhow, at
Right.
least for a prolonged period of time. So in order for oil to go to the 80 level, you would probably require both things to happen: demand destruction and the geopolitical risk premium being wiped out from the price.
How about Iranian oil coming back on the market?
The problem with Iranian oil is that although there are very significant sanctions, we forget that a lot of Iranian oil is in a second derivative way being moved to Europe and to Asia.
Okay.
So there is not so much actually Iranian oil that could add to supply. The only thing that could really make a big difference on the supply versus demand picture would be if Saudi Arabia, Emirates, and Kuwait added 2.5 million, 3 million barrels a
Okay.
day of supply. I don't
Do
think
they
it,
have that capacity to do it?
not right now. One of the
Okay.
things that we failed to mention sometimes, and it was there was a report today from Halliburton saying that there are already problems of supply in equipment for drilling. So it's not that easy to bring supply into the market.
Yeah, and even Russian production is down. It's hard to chew gum and walk.
It's
So,
exactly.
yeah, I wanted to ask you about one more thing that's been a driver in the market for a long time. And, I'm not sure about your opinion here, but technically, I think there's a possibility of a dollar peak coming in here for at least a correction.
Mhm.
And, the ECB could not have been any more dovish, right?
Yeah,
Last week when this was the ECB day.
yeah.
Can you think of anything fundamental that would be a driver for the dollar to peak out? Could it be the fact that we weaponized the Swiss system, that people are, other nations are even more motivated to have an alternative to
Mm.
not being held hostage on SWIFT?
I don't think so. I think
Okay.
first, because there's no alternative. If you look at the CIPS system, the Chinese system, it is
Yeah.
not valid for transactions globally. But I think that it's logical that the euro strengthens a little bit from here, because Lagarde, the ECB, start talking about rate hikes as inflationary pressures become more of a concern for the European citizens. That is likely to bring the euro.
35% in Germany,
Yeah, absolutely.
annualized, I think,
Yeah.
this week. or
Yeah, that's
ECB.
that's the producer price index. Absolutely. Yeah.
Right.
So big problem for the European Union to have this level of inflation. So I think that maybe slightly more hawkish messages from the ECB, and the fact that this Sunday, probably in France, Macron will be elected president, those might get some relief for the euro. But the
Okay.
fundamental problem, and the chart shows it very clearly, is that the euro long term is on a weakening path relative to the dollar that is fundamental and that is long term. And for the dollar, the problem is that there is no alternative. The yuan is not an alternative with capital controls and with daily fixing, and demand for dollars is rising because emerging market currencies are suffering from twin deficits. So I think that we're likely to see probably that trend coming back to the parity level probably before the end of the year.
Okay. So euro parity by year end, that's a nice call. Can you explain to me how this happened?
Well, basically because the level of deficit spending in the eurozone is
I'm talking
significant.
about US dollar yen now, Daniel. Take a look
Oh,
at this monster move.
yeah.
Can you tell me how this happened and how the bank BOJ gets out of it? They have a meeting next week. And
Mhm.
I could only imagine they're an importer of everything,
Yeah,
right? Except maybe cars and
yeah.
TVs and things. So if prices are high on their own and their currency is getting weaker and weaker, they must really have an inflation problem.
Yeah, and it doesn't show in the official CPI yet. However, what is true is that it's hurting the margins of Japanese companies, which are extremely important for the government. So what is very likely to happen is that the government agrees with the Bank of Japan for a pace of rate hikes that is a little bit faster than what the market expects, in order to bring the yen back to a stabilization, which is what they basically want. They want a strong currency, and they want it to be a little bit stronger than where it is right now. Probably not as strong as it was at the beginning of the year.
Okay.
It's a double-edged sword for them, both as exporters and importers. So they try to get the best of both worlds, and it never works. But I'm sure that they will try to accelerate rate hikes.
Okay, and they have plenty of foreign reserves. You think there'll be interventions, maybe before or after the BOJ, to stop this from being a one-way trade?
Probably the best way for them is to get rid of some of the excess reserves that they have built up from the high level of exports generated in 2021, and stabilize the currency. But obviously, it comes back to the flight for safety, and flight for safety is always going to benefit the dollar, because it's you mentioned before, in a fire, it's the house with the highest number of windows and doors. So I think that they will probably try to use some of those reserves and to hike rates in order to curb the devaluation of the yen.
Well, speaking of windows, Daniel, thank you for opening yours and giving us a view of what you see in the world today. It looks like we're going to have to buckle our seatbelts up
I
going
think
forward. Doesn't it seem that way?
I think it will be tough and challenging, but always interesting to learn from it. We're learning almost every day about new realities.
Yes. Well, you're one of the best at the jigsaw puzzle, Daniel.
Thank you
And
so much.
thanks for putting the pieces together for us here today and edifying our community. Thank you for your time, and I look forward to talking to you again down the road, buddy.
A great pleasure. Have a great day. Thanks,
And
everyone.
you could follow Daniel on Twitter at @DLacalle_IA. And then you could also go to his website and subscribe right here at dlacalle.com, and keep in touch with a macro view. Most of the people I know use microscopes. Great to have an astronomer here that uses a telescope. Thanks again, Daniel.
Thank you so much. Have a
All
great day.
right. Bye-bye. Hope everyone enjoyed it. Daniel Lacalle. Have a great day, everybody, and we'll see you. I'll see you next week. Remember, don't just count your barrels of oils or bushels of wheat. Count your blessings. Adios.